Welcome to CEO Interviews, a production of Agoracom, in which we take the time to speak with CEOs about what's going on with their companies. With us today, happy to have him for the first time, Alex Klenman. He's President and CEO of Azincourt Energy, trades in Canada under AAZ, and for our friends in the US, AZURF. For those of you new to the story, here's what you need to know. And it's the first company of its kind that we've had in quite a while, which tells you what's going on in the uranium sector. Azincourt is developing critical alternative energy projects for uranium and lithium. Core projects are in the clean energy space with uranium exploration projects in the Athabasca Basin of Saskatchewan. If you don't know what that means yet, we're going to talk about that. Why uranium and why Saskatchewan? Well, as we all now know, the world needs clean and renewable energy. It's a topic that everyone's talking about. Nuclear power is one of the safest forms of electricity generation. Nuclear power capacity worldwide right now, you may not know this, is increasing with about 50 reactors under construction. We'll talk about that and what that means. And there's also 20% reduction in concurrent mining production, which is pressing demand. So put those together: limited supply, growing demand. Uranium is the bull market. The companies in Saskatchewan, where uranium mining production have gone on for over 40 years, with grades that are 10 to 100 times the world average, and makes economic discovery feasible. They've got two great projects there. We're going to go over those. Alex, welcome to the show for the first time.
George, thanks for having me. I'm looking forward to it.
Let's talk about uranium, because before we get to the specifics of Azincourt, back in 2009, 2010, uranium was looking great. Nuclear reactors were going up all over the world. Fukushima happened. And right away, the fear factor came in, and it seems like uranium fell off, pardon the pun, fell off the face of the earth.
Yeah.
What's going on in the uranium market first right now, and where's it going?
Right. Well, you appropriately mentioned 2000, that little window we had in 2008 to 2009, and then again briefly in 2011. These things, I guess what we had were black swan events, right? Fukushima was the main situation, but we saw a spot at 120 or so in 2007, 8, and then 70 and back again in 2011, and then these black swans happen. It's like flying. Okay, nobody stops flying because there's an airline accident. They're very rare, statistically speaking. You're safe. The same thing in the uranium space, in the nuclear space. There are accidents. They've happened. You can count them on one hand, but they're so big, they're so catastrophic that the outfall from them is long and painful. So we saw that for 10 years. We went into a 10-year bear market. But as you mentioned, the supply-demand dynamic is coming to fruition here now, and we just don't have enough of the fuel out there to supply all of the utilities that are going to utilize the fuel to create clean energy over the next 2, 3, 4 decades.
And that's surprising, because you got 50 reactors, and I got to tell you, I didn't know that either. 50 reactors that are under, approximately 50, give or take, that are under construction right now. So it seems like the reactors are back, but people forgot about, hey, we're going to need supply for all this.
Right.
So that's created quite an opportunistic dynamic for Azincourt.
Right. No, there's other situations playing into that as well. Number one, most of the uranium mining, particularly in the Athabasca Basin, isn't economical until you get into that $50 spot range. So COVID and low spot prices have curtailed production in the basin. No one's going to flick a switch to get things rolling again until spot's at a very economic level. And even though you can flick the switch, there's obviously a gap between the mining process and having the fuel ready to ship. And then we also have the fact that for example, the U.S. utilities, which are one of the largest buyers on the planet of the fuel itself, have not been entering into long-term contracts. They're lagging. So when those long-term contracts to secure the supply are entered into, we expect to see a nice spot jump.
By the way, what is the price of spot right now, and where is the industry comfortable having it? I mean, obviously you'd love to have it at 500, but where's that now, and where does the industry generally need spot price to be at?
Right. We've been fluctuating in the 40s for several weeks, a couple months now. You know, the space is still extremely volatile. You see some of the stock, most of the uranium stocks are moving lockstep. So you see red across the sector or green across the sector. And that's just simply the way things are playing out right now. But as we look forward, we're going to be, there's just no doubting the fact that we're going to be in a very robust market throughout 2022 in terms of the space and the spot price.
And right now, spot's about 50. Where would you ballpark? Where do you think it should be for the industry? Where does it need to be? Like oil, for example, oil and gas. You always hear at the very least needs to be that $60-$70 range for most people to be economic. Right. They'd love it to be at 150, obviously, right. But they'd also want to see it at 20. What's that number for uranium?
I would say 50 is the base minimum. And we're in that range now, but we need to be sustained there for some time. And the way I see it, it's been a 10-year bear. There's pent up energy. And when all of those U.S. utilities have to start inking the contracts, the price is going to go up. It's that simple. Many of the producers are not going to sign contracts at the first person who comes knocking at the door for $50. They're going to want more than that. So we're going to see some contracts signed in this range. The majority of the contracts are likely to be signed much higher. And honestly, the utilities don't mind. It's only 5 to 10% of their overall cost is the fuel itself. So if it's $70, $80, $90, $100 spot, they're buying it. It doesn't matter to them. They spend much more money on security and safety than they do on the fuel itself.
So let's talk about Azincourt now. How you guys are positioned. You've got two great projects in the Athabasca Basin of Saskatchewan. If you can touch a little bit on that, I already gave some reasons to why it's Saskatchewan, but there are a lot of people, especially a lot of the younger small cap investors, they're just not familiar with the Athabasca Basin. So maybe just 30 seconds to a minute there on why Athabasca Basin, why is that the place to be?
Yeah, you touched on it. Mining friendly, big history of production in the area. The average grades in the basin are 10 to 100 times that of the rest of the world. It's a hotspot. Geologically speaking, it's a very unique place where you can find a lot of uranium. That's number one. So, and there's a lot to be found. Remember, we've just gone through a very long, depressed uranium market, and a lot of ground has been left undeveloped because there just wasn't enough funding in the sector, in the space, to really see development at a high level. So it's now coming back. A lot of the uranium explorers are cashed up, and you'll see a big uptick in terms of development in the area. But we have 25,000 hectares in our East Preston project, which is joined on the western side by Orano, which was Areva, the big French giant, $10 billion market cap. And then on the north side of our claim block is NextGen, so another $1 billion company. We have 25,000 hectares. We're proud of the fact that we earned the majority interest in this project in the bear. We managed to fund our way and spend $2.5 million and $1 million cash to earn the majority interest. We have about 73%.
And you guys were smart enough and tactical enough to do that, like you said, during the bear. So you're able to earn actually a lot more than you would in a bull market. So that says a lot about the management team. Being able to get ahead of things.
We played it well. The only downside was a little bit dilutive on the financing side, but in the uranium space, there are higher share counts. A lot of the Australian companies, as you know, they can't roll anything back in Australia, so you see high share counts there. It's part and parcel with the space. If you've been there since the early days of the bear, you're probably going to be a little bit more diluted than the companies that have just entered the space because it's hot. So we've been there. Our project is worth a lot more than what we've spent on it. We've drilled 17 holes to date. We're going to drill 35 this winter alone. We're cashed up, in the neighborhood of 12 to 14 million in the bank right now. So, which I should mention for a pre-discovery company is quite rare.
Yeah, actually, I want to touch on that for sure, but I still want to stay with East Preston for a second. Yeah. So you guys have identified priority drill targets is all the work you've done. And now your drill program is for about 30 planned holes, 6,000 to 7,000 meters. When does that start? How long will it take? And how long until you think you're going to get results back and find out if those drill targets actually were what you thought they were?
No, it's really great. So we have, north of 30 kilometers of targeted ground, which is not just areas that we look at and say, hey, that looks good. These are areas that met criteria through geochemical and geophysical surveys, ground truthing, all sorts of development time and effort on the ground to determine that these are the areas you want to drill. As you mentioned, we're going to be doing 30 to 35 holes. We will begin within about a week to begin the road and camp prep.
All right.
We'll be drilling in early January, 2 rigs. Simultaneously, we'll be drilling January, February, and into March. So it's going to be quite a long and strong program.
Are you going to be releasing results in intervals? You know, you're going to do 5, you're going to do a few holes, release results, or are you going to wait for all of them to be done and then release them?
That's a good question. We'll cross that bridge when we get to it. And we may be in a situation where, you know, if we're lucky to get a significantly mineralized hole early on, we may want to release that right away. It's going to come down to what Trevor Perkins, our Vice President of Exploration, wants to do. I defer to him on a lot of that. When we get to the drill stage, it's exciting. We're going to want to see what we have, and maybe a situation where we wait to put the news out all at once, or we do it as we go along. I'll tell you what's going to be happening this year is those labs are going to be backed up because there's so much money pouring into the space. There's so much drilling going on this winter. The labs are going to be stretched. So we'll see how it works. But
that is true. They're working slower than normal. That's for sure, just because COVID protocol.
Yeah, and just volume.
What's great, now let's go into the part about balance sheet. First of all, you've got strong institutional support.
Yeah.
Because funds own approximately 30% of the total shares outstanding. That's great. I don't know of too many small caps that have that. And then secondly, you've got a powerful balance sheet. So let's talk about the balance sheet first, because how far does that take it? $12-14 million. That could take you 5 years down the road. If you know, that's great to have that money. How far does it take you?
Sure. I mean, 40% of our market cap is cash, which is a you know, for a pre-discovery driller, is extremely rare for us to have this level of institutional support. But I think it not only validates the project, East Preston in particular, validates the space that institutional entities want to put their money in this space, but also validates the sector. You know, these guys aren't dumb. They do their due diligence. They see that they recognize the opportunity in the space. And we have, you know, around 20 different institutional funds that have invested into Azincourt to date.
How far does that money take you, Alex? Like, in other words, you have great visibility for, like, for example, let's talk about this 7,000 meter approximate drill program. How much does that cost you guys?
Yeah, we're in the 3 million range for this program. 15% of that will be picked up by our main partner, Sky Harbor Resources. So we're on the hook for the rest. Again, that's just one drill program. We have enough money to do 2 or 3 programs of that size in the next 12 to 18 months, and we intend to do that.
What's your intention? If everything goes well, and that doesn't mean perfect, but if everything goes well in the next 12 to 18 months, what's Azincourt's strategy here? Do you position the company for sale to a larger company, or do you guys want to go all the way through because you see that the uranium sector is going to be climbing and getting stronger and stronger?
Listen, in a perfect world, I know you said it doesn't have to be perfect, but I'm going to say in a perfect world, we are able to bring a significant discovery to a market, a healthy, robust uranium market. So the bull is here. We know it's here. How high will spot go? Be great to put good drill results out into what we're seeing. That would be the main goal. What we want to do is establish a mineralization in a significant way at East Preston, and then develop that. And that means finding out how big the footprint is. Is there a resource there? Is it broken? Is it tied together? What are we looking at? And that's really the goal. It's too early to talk about what we do when we find it, but if all goes well and we have a large enough resource, we would likely be knocking on other people's doors or having them knock on ours. We're not interested in becoming a production company, becoming a producer. That there are plenty of those, and they're right in our neighborhood. Cameco and NextGen and companies like that. So to be a small cap explorer in amongst these big companies is really a perfect storm for us.
You must have caught the attention of some of these majors that are around you, because raising that much money, as you said, from institutions, they're not fools. Doesn't mean it's a guarantee, but
No.
they're not putting up that much money on a throwing spaghetti against the wall and see what sticks.
Right.
Did that catch the attention of your partners around you? Is it fair to say, not your partners, sorry, your neighbors around you?
Mm-hmm.
Is it fair to say that they're going to be watching closely, because if you have success there, they may want to find a way to be a
Oh,
part of that?
yeah, and it's also important to realize they do know about us. Our neighbors are aware. When we do webinars and when we do certain broadcasts, for example, we know who's watching. And they sign up to watch the webinar, for example, and we know that they're keeping an eye on us. And why wouldn't they? We're big, we're well-funded, we're active, we're drilling. We have been to a certain degree, and they're always on the lookout for being able to increase their own stockpiles. So yeah, they know about us.
Last question, Alex. You're going to start drilling in January. In the meantime, you've also got the Hatchet Lake Uranium Project. What keeps you guys busy in the meantime as well? Because I know you guys aren't sitting around, just waiting for the drills to begin, even though you're going to start work next week. Will you be updating shareholders maybe on progress? How do you stay in communication with everybody?
Right. Well, Hatchet Lake, as you mentioned, is our second project in the basin. We just entered into an option agreement with Valor Metals, which allows us to acquire up to 75% stake in the project. We're going to spend $1 million in the next 12 months on that project alone. It's in the northeastern section of the basin. We're in the East Preston's in the southwest. Again, it's on the fringe.
Completely opposite ends of the.
Right, but we want to be on the fringe. Got to be on the fringe. One of the things about the basin is when you're in the middle of the basin proper, you've got a lot of overburden. The holes are a lot deeper and thus a lot more expensive. On the peripheral of the basin, the southwest or the northeast, you're looking at less overburden and 100 to 200 meter holes. And what's nice about our Hatchet Lake situation is it's right on trend with all of the production in the basin, right along the same important corridor that holds all of the producing mines. So we're close to production there, and it's a great project, which is why we picked it up. And it's our sidecar project, if you will, our second project in the basin. So we're excited to have increased exposure to the opportunities for our shareholders.
So fair to say that these next 12 months are going to be the busiest that Azincourt has been in a while, and it's a great time to reconnect with your shareholders and people who might have been shareholders and left the story and coming back. Right.
This is the busiest we're ever going to be. Obviously, listen, in 2019, we had a couple $100,000 in the bank and a 2-cent bid, and nobody would answer any calls, and it was bleak. Here we are a year and a half later, we're cashed up, we're drilling, we've got a second project. So things are going well and they're trending in the right direction.
And that's, by the way, we've got another client that we're interviewing yesterday. I won't say their name here, even though they're not in uranium, but go in the gold space. But they're achieving unbelievable things now, unbelievable things. But to get to this point, they went through dark, really deep periods where it was bleak, like you said. And the credit was to the management team that knew what they had and was willing to fight and be patient in order to get maximum value for it a few years later. Is that kind of the Azincourt story here too? That it was bleak a couple of years ago, and instead of saying, hey, let's throw up our hands, let's go do some cannabis or let's go do something else, the fact that you guys held on, is that a credit to you guys for knowing what was coming?
Yeah, no, I think so. One thing that anybody involved in the uranium space is well aware of now is the importance of patience. We could have walked, we could have dropped the projects, moved on to other things, but I lived through the 2011 run in uranium as a shareholder of a significant company that did really well. And I saw what happens to market caps in a uranium bull.
Sure.
And it was epic. So I always thought, this is the space to be. It certainly tested our patience. We had a lot of false starts in the sector. This appears to be it. Obviously, and all things are coming together. So the same thing happens now. That patience that we were able to exert that got us here, I would say, is a good plan for investors as well. Right now, the volatility in the space is testing investor patience. Up, down, up, down. We just seem to be kind of stalling and creeping along. And I would say to people, let it ride. Wait till we get $60, $70, $80 spot. The whole thing's going to look a whole lot different, and you're going to be happy that you stuck it out.
Yeah, and you're talking about that patience was predicated. Some part of that was you've seen where the uranium market can be. And
Absolutely.
I remember I was at PDAC. I'm sorry, it was Fukushima 2011 or 10. I think it was 2011,
yeah,
right?
Yeah.
I was at PDAC, and the uranium companies were, pardon the pun, the hottest companies there. As unbelievable was going on. Everything was bullish. And then Fukushima happened and literally shut down the industry overnight. But you've seen what can happen. And that's why, and that's why you knew Azincourt just had to stay in the game.
I wasn't going to give up on it. Fought like hell. Had a lot of doors slammed in my face. A lot of calls that didn't go well. But here we are, and we're happy to be drilling what we think is one of the best exploration projects in the space. So we're excited. We're cashed up, and obviously, look, others feel the same way. Institutional support would validate that we're in the right place.
And third-party validation, you don't know this, Alex. This is the first interview we've done, but I say it on Agoracom over and over again. Third-party validation is what you need. Either you've got a customer you're selling a product to, you've got a partner who believes in your product, and a major partner I'm talking about, or you've got the street, in this case, Bay Street, believe in you enough to really invest some serious money.
Oh yeah,
and that's great third-party validation. Otherwise, it's hard for the investors at home to figure out, does Alex have something or not? We're not uranium experts. What do we know about the Athabasca Basin, really? So that's great third-party validation.
It's global support. I mean, we've got funds out of Australia, we have funds out of Europe, we have funds out of the United States, and we have obviously fund support out of Canada as well. So it's nice to see, and surprising in a lot of ways. I did not envision this being as prolific as it's been over the last few weeks and the last few months, but we're heading there, and it's a good indication of things to come.
Well, Alex, congratulations on getting the company into a position like this. Can't wait to see what's going to happen. Obviously, we're going to have you back on a lot in these next 2, 3, 4 months as all this action is taking place. But I think I speak on behalf of your shareholders when I say, congratulations and thank you for the patience, the persistence, the stick-to-itiveness of not giving up, and now putting the company in this position to see, what's going to happen in 2022.
Yeah, thanks. Appreciate it, George. And we're looking forward to it. It's going to be busy the next few months.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform, to Alex Klenman. He's president and CEO of Azincourt Energy, trades in Canada under AAZ, and for our friends in the US, AZURF. For those new to the story, 2 ways to do your due diligence. First, get over the company's profile page on Agoracom, because we've got a good 1,000-foot overview, kind of summary profile built in for you there. And then once you're armed with that, link over to the Azincourt website to do your deep dive due diligence, because if you believe in the future of clean, renewable energy and the role uranium is going to play in that, then you've got to do your due diligence on Azincourt. Thanks for joining us. Have a great day. See you next time. Hey guys, the video's over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our YouTube channel so you never miss another great Agoracom small cap video.